Hey guys, it is Julie here with JT Wealth. In today's video, we are looking at 3 growth stocks with some massive upside potential. So let's get into it. Alright guys, welcome back and thank you so much for being here. I hope everybody had a fantastic Thanksgiving and is hopefully enjoying a nice long weekend. I am on the back end of my vacation now, so we'll be home in the next couple of days, but just wanted to discuss 3 different stocks today to give you something to think about for Monday when market opens again. And just before we jump into those 3 stocks, this is just your friendly reminder that if you enjoyed today's video, make sure you give us a big thumbs up and leave your thoughts in the comments down below. Also, if you enjoy free stocks, make sure to check out the links down below in our description. Right now, Webull is giving away 4 free stocks for opening up and funding a new investment account, so make sure to check them out. Now, we are taking a look at 3 different stocks today, and they all have upside potential over 40%. One of them is almost 150% upside potential. And the first company that we are going to take a look at today is Vroom. Now, they trade under the ticker VRM and currently around $37 per share. Now, Vroom is a newcomer in the markets. It IPO'd just back in June and rose quickly, peaking in around September 1st. Since then, the shares have slipped and are now down 22% since their first day's close. Now, the rise and fall of Vroom stocks is due to conflicting tailwinds and headwinds pushing against their price. Now, Vroom is an online retailer in the used vehicle space. In addition to cars, the company also sells spare parts and accessories and offers insurance, car rentals, and funding for purchases for U.S. customers only. Now, some of the positive tailwinds for Vroom this year definitely included the general shift to more online retail shopping. Plus, they're focused on used vehicles as people were a little more timid to be spending more of their money. Of course, that reluctance to spend did also hurt Vroom, plus people staying at home were less focused on needing a new vehicle. Now, covering the stock for JPM, analyst Rajat Gupta sees the stock's current state as an opportunity for investors. The bad times are likely temporary, he believes, and this company is set to take off. Net, with near-term expectations now reset and potential for acceleration in both unit growth and gross profit into 2021, we view the setup as favorable in the near to medium term for the stock with little incremental negative catalysts. We believe execution will be key given heavy reliance on third parties for key operational aspects such as reconditioning and logistics. In line with this assessment, Gupta rates the stock an overweight buy, and his $70 price target implies an upside of 91% for the year ahead. And other analysts seem to agree. Looking at the tip ranks for Vroom, it is rated a strong buy, with 10 buy ratings and just 1 sell. The average price target comes in at $59.40, which represents about a 59% upside. Second on our list today is Kodiak Biosciences. They trade under the ticker CDAK, currently around $9.61 per share. Now, Kodiak Biosciences is said to be engineering precision exosomes, developing revolutionary medicines. They're harnessing the power of exosomes to create a new class of therapeutic medicines for patients. Kodiak has developed a design platform for the engineering of exosome proteins capable of carrying and protecting drug molecules through cell walls. In effect, the proteins will mimic the pathways used by viruses, but are non-viral and are designed to carry a payload of therapeutic agents. If successful, exosome therapy offers doctors the ability to design a drug that will deliver specific agents to specific cells to fight specific disease. Now, Kodiak is involved in all aspects from design to manufacturing and currently has 7 active pipelines. In the biosciences, success or failure is all about that pipeline, and in its diverse, active pipeline of agents in a new sector of biotechnological pharmaceuticals, Kodiak has a fine resource to attract investors. To get those investors, the company went public this past October, selling 5.5 million shares at an opening price of $14.10. From this Tip Ranks article, among the healthcare names fans is Goldman Sachs analyst Greg. The analyst wrote, biopharma industry interest in exosomes has long been high, but engineering them for a specific function and manufacturing at scale have both proven challenging. Among a field of multiple competitors, CDAC has made the most significant progress on both fronts, and as such, we view their technology platform as best in class. Now, given the shares' underperformance of negative 37% since their IPO, we find the risk reward highly compelling at current levels, and with key 2021 datasets to provide potential de-risking and positive share inflection. So he rates CDAC a buy, and his $29 price target shows the extent of his confidence, as that implies about a 222% upside for the coming year. And other analysts agree. CDAC is currently rated a strong buy with 3 buy ratings, and their average price target of $24 represents about a 150% upside for the stock. And last on our list today is Arcutis Biotherapeutics. They trade under the ticker ARQT and are currently around $25.94 per share. Arcutis is a pioneering researcher in the treatment of dermatological disease. Arcutis is involved in discovering the next generation of dermatological treatments, an important niche, especially when one realizes that one common ailment, psoriasis, has not seen an FDA approval for a novel treatment in over 2 decades. From this TipRanks article, the company's lead candidate, ARQ-151, is about to enter a phase 3 trial for atopic dermatitis and is in an advanced phase 3 stage in plaque psoriasis. Arcutis has recently issued an update on positive data from the phase 2 trials of ARQ-151 in atopic dermatitis. The drug is a once-daily treatment and has demonstrated significant patient relief from symptoms, especially itching and itching-related sleep problems. Now, this is another stock that was covered by Craig from Goldman Sachs. And he is impressed by developments in the company's pipeline work, noting ARQT provided an update on the outcome of its end-of-phase 2 meetings with the FDA, following their phase 2A trial of ARQ-151 in atopic dermatitis. Feedback from regulators was broadly encouraging, in particular acknowledging the robust long-term safety data being generated by ARQT for ARQ-151 in plaque psoriasis. Accordingly, he rates them a buy and sets a $36 price target that indicates room for about 40% upside growth in 2021. Now, there is only one other analyst that has covered ARQT, but they do agree. As the stock comes in as a moderate buy with those 2 ratings, their average price target is about $37 per share, representing about a 42.64% upside. So there we have 3 stocks with some pretty appealing potential upside there. Of course, these videos are never a suggestion to buy or sell any specific stock, and any trade should only be done after doing your own research and due diligence. On that note, you guys know I always love hearing from you, so please let me know your thoughts in the comments down below. What do you think of these 3 stocks, and what other stocks are on your radar right now? If you made it all the way to the end of today's video, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful weekend, and cheers.